Hello and welcome to Smaulgld. In case you missed it, top gold and silver stories for the week ended March 19th, 2017. Fed raises rates on Trump as economy slows. So the Fed raised interest rates for the second time since Donald Trump was elected president. They raised rates only one time over the prior 9 years. So that is two rate hikes since December. So within a 3 or 4 month period, the Fed has raised rates 50 basis points. People's Bank of China also raised interest rates, which lends into my theory that the concept of currency wars is rubbish and that central banks actually coordinate their rate hike and their QEs together. They do not, they act in concert, thick as thieves, rather than currency wars, which was the case back in the 1920s and 30s when central banks were indeed working at cross purposes. I think they have their act together now. There are not currency wars. The analogy doesn't hold for what central banks used to do. Today, they all seem to work together, timing their interest rates and their quantitative easing. They're all members of the IMF, so they all seem to work together. Gold and silver rebounded after the rate hike. Let's take a look at what's happened. So let's do the top stories first outside of economics. Rachel Maddow had a big scoop. She was going to release Donald Trump's tax returns, and she did. And they showed that Donald Trump paid taxes, made a lot of money. And prior to her releasing this, she babbled on for a half an hour, during which time the White House released a statement and what she was about to release. So it kind of took the wind out of the sails. It also somewhat destroyed the narrative that Donald Trump hasn't been paying taxes, because he indeed paid a tax rate, I think it was about 25%, which was more than the beloved, twice as much as the beloved Bernie Sanders, and more than Obama, and even more than Comcast's parent paid in taxes. So at least that was one down for Rachel Maddow, and the scoop of the century turned out to be a big dud. Second big news of the week was Trump's second travel ban was struck down again by a Ninth Circuit judge in Hawaii, this time citing an Anderson Cooper interview as one of the legal bases for striking down the travel ban. I'm going to do an entire podcast on this. This is actually a very disturbing trend. I think no matter where you fall on the travel ban efficacy, or whether you're in favor of it or against it, this is an opinion, a legal opinion, that you should be against, no matter what your view is on the travel ban. I'm not going to go into all the details now, but this is not a legal opinion. This is the courts taking into their own hands the ability or the power to make policy decisions or to override policy decisions that either the Congress and or the president have made. This is not a legal opinion. We're going to show you probably in a couple of days. I'll have the podcast out why this is a dangerous precedent, and you'll see when we give examples how it can be applied. It can be boomerang against those who think that this is a good idea. So in short, unless your only view of the world is that a travel ban would be the ultimate catastrophe for the world, and somehow it must be stopped, because if it's not stopped then the world ends, that could probably be the only way you could justify this type of overreach. If not, and you realize other issues, important issues, will come to courts, then you'll realize that this type of adjudication has no place in a free, democratic republic, in any type of society that has a rule of law. And we'll get into that in a future podcast. Top economic story of the week, as we mentioned, Fed raises rates, as did the People's Bank of China, in a seemingly calibrated move that was hinted at, by the way, during a G20 summit a year ago. So when these countries meet the central banks, they all realize they may have opposing interests in some respects, but they're all in it together. They all print money. They all take on big amounts of debt. They all try to keep interest rates as low as possible. They all do QE. So to think that they're in war with each other is kind of ridiculous. They are all pulling off the same grand caper, which allows them to continue to print money and to keep the confidence in the system. Because if one or two countries were to break away from this system, well, obviously the ones that were still in the system would look bad. So for a lot of people think, oh, China's going to do this and they're going to back their gold, they're going to back their currency with gold and it's going to be game over. Nonsense. China wants to be part of the entire world. They don't want to just trade with Russia and Iran and a couple other countries. They want and need to trade with the United States and Europe and the rest of the world. They don't want to crush the dollar. Anyway, I'm going off on a tangent. I'm going to stop. Okay, now Janet Yellen, after she raised rates or had the entire Fed Open Market Committee raise rates, other than Kashkari, he dissented. He thought they should leave rates where they were. Uh, she gave a press conference, and generally the press conferences, people throw her a softball, and then she just says nothing. Well, this time, Kathleen Hayes, I think she's CNBC, she kind of pressured her, and she didn't say anything that outrageous. She just asked, "What are you doing? It doesn't look like the data I'm looking at shows that the economy is overheating, that you're hitting your inflation target, that there's any real reason, the way you think, Federal Reserve, to raise rates." Putting aside other reasons to raise rates. And Janet Yellen basically couldn't explain that. And I think Kathleen Hayes also mentioned, and if she didn't, I'll mention, the Atlanta Fed showed this in their GDP Now calculation, growth falling from an original projection of about 3% to less than 1%. Now, this is the Atlanta Fed. This is uh, their own central bank, or their own regional bank is what it is, coming up with these statistics. So obviously they are not looking at them and saying, well, they're nonsense and our internal projections, so the first quarter growing faster. This is the Atlanta Fed showing this low growth rate. And Janet Yellen's answer was that 3 months worth of data, GDP can often be noisy. Yes, now noisy sounds almost like a Yellen term, but it's not. It's a economic term that shows that there could be a lot of things in the data that make it not reliable. And it is true that the first quarter of the past 3 or 4 years have been lower than the rest of the years. For some reason, they think something to do with the weather. It's permanent. I don't know. Maybe it's the way they calculate it. But it is true that the first quarter generally in the last few years has been lower. However, she then went on to babble and not really make it stitch of sense, other than saying that, and you can watch it here, I've left a link here, that the Fed still believes in their projections, notwithstanding what's happening now. Somehow they believe something that's going to happen in the future is more reliable than what the Atlanta Fed is looking at now. And this seems to me to be that the Fed has decided that, they need to do a couple of things. They've talked about raising rates for years, never did it. And we can suspect one reason they didn't want to do it. They didn't want to undermine the Obama administration that had appointed most of these members. And that goes all the way back to 2012. They were doing QE in 2011, 2012, 2013. And when they ended QE, they took their sweet time coming around to even raising rates, and they only did it once in December of 2015, which gave the economy enough time and the stock market enough time to recover for the 2016 elections. Once the elections are over, they realized they've been yakking about rate hikes. They decided to get busy quick, fast, and in a hurry, and they raised rates in December, again in March, and they're still talking about they might raise them a couple of more times. We have more reason to believe them this time than we do in the past, because in 2014 and 15 they were talking about raising rates 4 times. They didn't do it. They only did it once. In 2016 they were talking about raising rates 3 or 4 times. They didn't do it. They raised them once. Now they're talking about raising rates 3 or 4 times, and they'll probably do it. And that will set the stage for a showdown, as I mentioned in a few podcasts back, between Donald Trump and Janet Yellen. He's already, prior, when he ran for office of the presidency, he had mentioned that Janet Yellen was a disgrace. She had disgraced the country. She was creating a bubble. Now he seems to be thinking it's a wonderful thing that the stock market's going up because, of course, he can say it's because of him. Well, as we know, Donald Trump never takes the blame for anything, and if the stock market were to fall because the Fed is too aggressive in rate hikes, or there's any other type of economic calamity or even correction, you can be sure that Donald Trump will squarely place the blame on Miss Yellen and her policy, and he easily will find, not just amongst his supporters, but he may find also support for those on the left because they also favor highly accommodative monetary policy. And if the Fed were to change this, then she might lose some of her support. And she's out anyway. I think her term runs out in 2018. So we'll have to watch what happens to the Fed and who Donald Trump replaces her with. Let's get to gold and silver. Gold closed up 2%, as we mentioned, up about $24 to up 2% to 1,228.8, and silver also closed up about 2%, up about 36 cents. But since they both rose the same amount, you still have your gold silver ratio at 70 to 1. We'll look at the gold silver ratio. If you need to do that, you click on that link and you can check it out. We'll take a look a little later on in the podcast. But that gold silver ratio doesn't appear to be going anywhere. There's your pitch to donate to Smaulgld. Thank you for those who do. Now, here is the tweet of the week. Now, I'm not going to play it. You need to go to the website to see this. I'll put a link below. But Idaho just made gold and silver tax exempt. And I think you also have Arizona. There's a few states that are kind of pushing this concept, Utah, of kind of making sure that people can use gold and silver and that it's viewed as something as a medium exchange that you don't tax, at least at the state level. Well, you really want to hear what this guy has to say when he was arguing against the gold and silver bill that was before him. That is the tweet of the week. You can click on there and listen to what comes out of his mouth. Okay. Here's some of the stories we covered. Again, mentioned Texas is another one of the states that is big on gold. It's time to protect gold depository, reduce precious metal taxes again. So there's kind of a, I wouldn't say it's a groundswell, but there's a few states that are involved now in legislation at various stages of approval to get gold and silver tax relief. Indian gold demands bouncing back. This was covered during the week. You can check that out. The January numbers weren't good, nor the December numbers for imports, but February looks like they're picking up. There's some pent-up demand after that rupee devaluation. There's your pitch. If you're interested in buying gold or silver, you can do so through the Smaulgld site. Not investment advice, but if you've made the choice to buy gold or silver, please consider doing so through the Smaulgld site at the links below and at the links on the Smaulgld site, and the banners: BGASC, Golden Eagle Coin, JM Bullion, Money Metals Exchange, and our friends over at SD Bullion. There's a banner there for those of you who can't find it. It's up at the top. It's not listed as a link, and I have to disclose that Smaulgld does make a very small commission on each sale, so that's a way of helping out the website. Your Perth Mint sales, you can check those out. We covered them during the week. They were down. It's an interesting trend. All the sovereign mints had lower sales in February in gold and silver, but yet the Shanghai Gold Exchange physical deliveries were way up. Record year in February, record February for the Shanghai Gold Exchange for withdrawals. And as I mentioned, gold and silver imports into India are also up. So there's a divergence there. PPI looks like it's heading up. That was released during the week, 0.3%. There's your Shanghai Gold Exchange. Again, these are available on YouTube, and they're also available at the Smaulgld website. You can. My advice would be, if you go to the website, you can follow this entire YouTube as we go through it. There's a blog post, and you can click on the links. You can click on the YouTube videos. You can check out the tweets of the week, the charts, and so on. A lot easier if you follow along on the website. So the Fed raised rates, as I mentioned, China raised rates, and then BOJ left their policy unchanged. So if you remember what the Fed did, when they stopped QE, Japan started theirs. A few months later, EU started theirs. So ECB started theirs. So they work together. They coordinate this kind of stuff. I don't believe in the currency wars and say and the cider says SDR, that kind of stuff. Okay, business inventories. Here you can look at the U.S. economic data. Look, retail sales not very good, but the CPI is up. The savings are down. So you don't really have much in the way. That's why the malls aren't doing well. You got retail sales down, and then you got inflation. So it's hard to buy stuff if prices are going up and your wages are stagnant. As I mentioned, Atlanta GDP now, first quarter estimates reduced to 0.9. U.S. Mint sales, I'm not going to go through them. You can check the website, but they are not good in March either. But again, doesn't mean anything. It just means someone mentioned in a comment, which might be true, people don't have money in the United States to buy gold or silver. I mean, it may make sense for them to do so, but they're spending their cash on necessities, paying down debt, paying their mortgage, paying their rent, paying their electric bill, whatever it is. So that could be another reason. They may want to buy it, but they just can't. Okay, we're almost done here for the week. Very other than the big issues, we didn't have much going on in the gold or silver markets. Let's see what else we got here. Oh, Bank of England, yeah, they held their rates the same. We mentioned that. Swiss National Bank kept their rates low. Some interesting links here on gold hoard found in a piano in England. Police recovering ancient Indian gold coins. What else have we got? Industrial production. Look at that. It's flat. Consumer sentiment is high, but I've never placed any confidence in consumer sentiment is a foretelling any type of what's going to happen in the economy just because consumers are clueless. They know what they hear on the radio. It's feelings, less. It's not based on any analysis, and I just don't know if they. I always mention that prior to the Great Depression, consumers thought things were great. They didn't know it was about to hit them. And is your Perth Mint silver sales? They were down in February, bigly or huge. And that about does it. So thanks again for listening. Oh, the gold silver ratio, I promise you we go back over to there. You can visit this page and you can see there's a live chart. That's what the gold silver ratio looks like at 75 to 1. And you can see a 1 month chart, 1 year chart, 5 year chart, and a 10-year chart. So thanks again for listening. Be sure to check in later in the week when we do the analysis, legal analysis of the Trump travel ban. Thanks for listening.